Hello everyone, how are you all? This is CA Rohit Grover, your faculty for CA Final Auditing Advanced Auditing and Professional Ethics paper. So finally, we are on a very important chapter now. So the name of the chapter, as you can see, it is there in front of you. The name of the chapter is known as Audit Committee and Corporate Governance. What is the name of the chapter? Audit Committee and Corporate Governance. So let me give you the introduction. Let me give you the introduction of this particular chapter now. How we are going to proceed in this chapter, what is the weightage of this chapter, and how this chapter is so much important from your examination point of view, right? Now, let us understand what audit committee and corporate governance is all about, right? Now, first of all, we have to understand the name of the chapter first, right or not? So what is the name of the chapter? You can see that the name of the chapter is known as Audit Committee. The name of the chapter is known as Audit Committee. What is the name of the chapter? Audit Committee and Corporate Governance. So before jumping into this chapter, before understanding this chapter, first we have to understand the framework of this chapter. Are you getting the point? We have to understand the framework of this chapter, how we are going to proceed in this particular chapter. Remember one thing, you all know that ICAI has recently introduced the May 20 onwards study material for all of you. What my suggestion is, these three chapters, what are the three chapters? Company audit chapter, which we have already covered, company audit concepts, all the company audits, professional ethics concepts, and the this thing called audit committee and corporate governance concept. These three chapters are highly important, which you have to do it from the ICA material only. So what I did is I also incorporated the whole ICA material in our study material, which I'm providing you when you're purchasing the classes, right? Now, especially in these three chapters, there are so many other chapters also where we'll be reading out from the material and we'll be doing it. Rather, you already know that in most of the chapters, what I do is I tell you the concept via my handwritten notes. I tell you the whole concept, each and every provision of the concept via my handwritten notes, right? Now, how we are going to proceed in this particular chapter, we have to understand provisions, what the ICA material and what the SEBI regulations are telling. Are you getting the point? What are the provisions written in the ICA material and what are the amendments in the SEBI LODR regulations? So that first we have to understand. So let me give you the structure first, how we are going to proceed with this particular chapter called Audit Committee and Corporate Governance. Now listen to this very carefully. First of all, our very one lecture, minimum one lecture or 1.5 lecture must be dedicated in understanding the concept of what? In understanding the concept of what? Audit committee. Are you getting the point or not? Minimum 1.5 lecture we have to dedicate to understand the concept of what? Audit committee. Now let me give you the broader idea. Why this chapter is very important. Now see, there are two things happened in this chapter. First of all, in ICAI material, first of all, in ICAI material only, in ICAI material only, so many amendments were there. In ICAI material only, so many amendments were there. When the May 19 onwards material got turned into the May 2020 onwards material, there are so many amendments were incorporated by the ICAI that by the time we'll do the chapter, you all will come to know. So many ICAI amendments are there. Second thing is the RTP. Second thing is what? The RTP which came in November 19. The RTP which came in November 19 and the RTP which came in May 20. There also so many amendments came. So in this chapter called Audit Committee and Corporate Governance, we have to understand two types of amendments. How many types of amendments? Two types of amendments. One are the amendments which were incorporated in our study material already, and one are the amendments which were incorporated by revisionary test papers later on via November 19 RTP and via May 20 RTP, right? That makes this chapter a very important. And let me tell you one thing, this chapter is huge as well. It's a very vast chapter. But the beauty of this chapter is we are going to learn each and everything about the listed entities. About the which entities? Listed entities. Those which are listed companies, this chapter is basically completely dedicated to the listed entities. Are you getting the point? So the name of the chapter is Audit Committee and Corporate Governance. So let me give you the brief what Audit Committee is all about. Then we'll understand the Audit Committee in detail. And then I'll give you the chapter overview also. What do you mean by Audit Committee? First of all, try to understand what do you mean by the term called Audit Committee. Now, Audit Committee का मतलब क्या है? Audit Committee is basically an independent committee. It is basically a which committee? It is an independent committee. Sir, what do you mean by independent committee? If I have to tell you in one word, all the functions, all the roles, all the powers, all the duties, mostly all the functions, powers, duties, roles and responsibilities of the board of directors, of the management of the company have been taken from the hands of the management, and put it in the hands of what? Which committee? Audit committee. This was the most revolutionary step which was taken by the Companies Act 2013 and the SEBI Act 1992. Yes, you have heard me very correct. When we'll do the audit committee, we will do the audit committee of two types. What are the audit committees we have to do? We have to do the audit committee of two types. First audit committee is the audit committee which is defined as per Companies Act, Companies Act, as per Companies Act 2013. And the second kind of audit committee which we have to understand is as per the SEBI Act 1992. Basically, in the SEBI, we are going to understand LODR regulations. We are going to understand which regulations? LODR regulations. Sir, what do you mean by LODR regulations? It is known as listing obligations and disclosure requirements. This is what the full form of LODR. So what is the full form of LODR? LODR stands for listing obligations and disclosure requirements, right? So what is LODR? LODR stands for listing obligations and disclosure requirements. So let me just give you the introduction about the LODR first. Now, if you all remember, or I don't know whether you know or not, there used to be earlier one thing called clause 49 listing agreements. There used to be one thing called clause 49 listing agreements. Are you getting the point? So basically, what do you mean by listing agreements? Once you turn yourself from an unlisted company to a listed company, now SEBI Act 1992 says that there are some clause 49 listing agreements which you have to comply with. Means what? Your board of directors should have that many independent directors. You should disclose the related parties. You should have an audit committee. You should have a risk management committee. This should be the composition of the women directors. This should be the composition of executive directors, non-executive directors. So once you become a listed company, on you Companies Act does not work. On you SEBI Act governs you. Are you getting the point? What governs you? The SEBI Act 1992 governs you. So under the SEBI Act, the LODR regulations is a highly important topic which has been present now. Now, what is LODR basically? LODR has recently replaced the clause 49 listing agreements. Before LODR, we used to call it as a clause 49 listing agreements. Are you getting the point? We used to call it as what? Clause 49 listing agreements. Now, clause 49 listing agreements were recently replaced by what? LODR regulations, which is now known as listing obligations and disclosure requirements. If you are a listed company, you have some obligations and you have some disclosure requirements relating to your subsidiaries, relating to your committees, relating to your composition of board, relating to the remuneration, relating to the functionality, relating to so many other things. That is why that makes this chapter a very huge thing. So in totality, what I'm trying to tell that we are going to understand two types of audit committee in this particular chapter. One is the audit committee which we already know in our intermediate subject of audit in our IPCC level under section 177, which we have already done under the IPCC and intermediate level, ki what audit committee is all about as per Companies Act. So that audit committee we have already known, but still we have to do it again here. And we are also going to understand the meaning of the audit committee as per SEBI Act 1992 LODR regulations. So that is what the main picture of this chapter. That's why I told you this chapter is basically divided into two parts. Now, what are the two parts? In the one part, we are going to talk about which committee? Audit committee. But in the other part, we are going to talk about what? Corporate governance. So in the one part, we'll talk about the audit committee. In the another part, we'll talk about the corporate governance. Audit committee itself is a very huge topic. There are so many regulations which you have to understand in the audit committee. And corporate governance means other than audit committee, what are the other obligations of the listed entities, like how many independent directors in the board of directors, what is should be the remuneration paid to the executive directors, non-executive directors. So that is called corporate governance. Now, let us first understand what audit committee is all about. I already gave you an idea. Audit committee is basically what? All the powers of board of directors, which board of directors used to enjoy, all those powers have now been shifted in the hands of whom? Audit committee. Now it is the audit committee only which will review the interim financial statements and final financial statements. It is the audit committee only which will check the adequacy of internal control systems of an entity. It is the audit committee only which will always keep on monitoring the end use of the borrowings. Are you getting the point? So what board of directors used to do earlier, all the powers of the board of directors have now been shifted in the hands of which committee? Audit committee. So audit committee are of two types. What are the two types of audit committee? One is the audit committee which we are going to do as per Companies Act, and one is the audit committee which we are going to do as per the SEBI Act. So many regulations relating to audit committee. Will understand what is the difference between an audit committee under the Companies Act and an audit committee under the SEBI Act. So obviously, if you are a listed company, you are going to follow the rules and regulations relating to SEBI Act 1992. Actually, if I'll tell you, LODR regulations is an ocean. Out of those ocean size of regulations, some few picked and important regulations which the auditor should have the knowledge of if you are going to be an auditor of an listed entity in future, that we are going to understand in this particular chapter. As a listed company, what are the things in your organization should be taking place? That is why it is known as LODR, listing obligation and disclosure requirements. Second thing which I want to tell, the second part of the chapter talks about what? Second part of the chapter talks about what? Corporate governance. So what is the name of the second part of the chapter? Second part of the chapter talks about what? Corporate governance. Now, so many of us do not have an idea what do you mean by corporate governance. Corporate governance, in simple word, if I have to tell you, corporate means what? Companies. Corporate governance means what? If you are a company, you should behave in a responsible way. If you are a company, you should behave in a responsible way. What do you mean by responsible way? With the help of laws and compliances which are applicable on you. With the help of what? Laws and compliances which are applicable to you. So as a listed company, SEBI expects that you as a listed company should behave in a responsible way. Whatever is written in the LODR regulations, whatever is written in the which regulations? LODR regulations must be complied by the listed entity. Must be complied by the which entity? Listed entity. So what does SEBI expects that being a listed company, you should follow these laws and regulations which I have written under the LODR, listing obligations and disclosure requirements. Meet the requirements, disclose these requirements as per the requirement of the SEBI Act 1992. I am happy, but behave in a responsible way because public money is invested. Transparency. So basically, in another words, corporate governance is known as what? Corporate governance is known as fatal. What do you mean by corporate governance? It is known as fatal. So what does SEBI expects from its listed company? SEBI expects from its listed companies to be fair, to show the fairness. Are you getting the point? To show the accountability, to show the integrity, to show the reliability, to show the transparency, to show ethical conduct, and to show the compliance of laws and regulations. Are you getting the point or not? This is what the definition of fatal, and fatal is nothing but called what? Corporate governance. So basically via corporate governance regulations, what the SEBI is trying to tell you that कि भैया कि if you are a listed company, be fair in your dealings. Be responsible for what you are doing. Be honest and sincere company as a listed company, because hell lot of public money is involved. Be reliable. Be reliable. Show some reliability. Prepare your books of accounts in a reliable manner. Have a transparency. Show everything to the shareholders. Disclose so many requirements to the shareholders and to the public and to the users of financial statement, or whatever you call it as a stakeholders of the organization. Everyone should know what is happening in the company. So you should be an open book. That is what the SEBI wants from a listed entity. So for making the listed company an open book, SEBI has introduced so many corporate governances. So what do you mean by governance? Governance means rules and regulations. What do you mean by corporate? Corporate means company. So company has to follow some rules and regulations. That is what we mean by the term called corporate governance. And when you will follow these rules and regulations, you will be in a position to behave in a very responsible way. Are you getting the point? This is what the basically the chapter is divided into. And SEBI also expects you to show the ethical conduct. Show some code of ethics. As a listed company, you have to be ethical in the public view, so that your brand image, your goodwill should not be damaged. And as a listed company, you have to ensure that all the laws and regulations which are applicable on you must be complied with. I hope all of you understood what we are going to do. So basically, this chapter is divided into two broad topics. What is the name of the chapter? First of all, the name of the chapter is known as Audit Committee and what? Corporate Governance. What is the name of the chapter? Audit Committee and Corporate Governance. So what is Audit Committee? Audit Committee are of two types, one under the Companies Act and one under the SEBI Act. That we'll learn. It's a very huge topic, so maybe one and a half class will be dedicated only on Audit Committee, and then we'll be having approximately 2 to 3 lectures on corporate governance. So many provisions are there, and let me tell you one thing, for the examiner it is very important chapter, and it should be very important chapter from your point of view as well, because it is having a weightage of 8 to 10 marks in the examination. A single chapter is having a weightage of 8 to 10 marks. So no doubt and no shock if you will get some MCQs also, plus if you will get any subjective or descriptive question from this particular topic called Audit Committee. I hope all of you are understanding what I'm trying to tell. Are you getting the point or not? Why it is MCQ favorite chapter? Because there are so many small provisions. So that's why now we are going to use a different format. We are going to read from the material. You can see that we are going to read from the material which has been prepared as per the ICA material, ICA study material. And along with that, once we will be done with one particular topic, we will prepare our class notes on the other side. So on one side, we are going to have a discussion on the material, and on the other side, we are going to prepare what? Class notes like this, so that you will get a benefit of both in the single video only. I hope all of you understood the criteria of doing this particular chapter. Now, let us have some introduction to what we are basically going to understand in this particular chapter. First of all, we will understand the legal framework of this chapter. What we'll understand? We'll understand the legal framework of the chapter. Sir, what do you mean by legal framework of the chapter? We'll understand what this chapter is basically including. It includes LODR regulations. LODR regulations. On which entities? On the listed entities. Which listed entities? Whose securities are listed either in the stock exchanges, or they have the listed mutual funds, or they have the listed depository receipts. So all those points we'll understand. So it will give us an idea what is basically the legal framework of this particular chapter. Right? After that, there will be a huge discussion which is going to take place on one topic called what? Audit Committee. Audit Committee as per Companies Act, and audit committee as per which act? SEBI Act. This is what we are going to learn. Then we'll understand about everything about the board of directors. What should be the constitution of board of directors? Who will constitute the board of directors? How many should be women director? How many should be executive director? How many should be non-executive director? In how many companies you can become the board of directors? In which company? In how many companies you can become a chairman of the committee? All those things related. What should be your remuneration as a board of director? So in this topic we'll understand everything about the compliances, rules and regulations and corporate governance of the listed company in relation to its board of directors. So it is the audit committee and the board of directors topic. It is the audit committee and board of directors topic where we are going to have a huge discussion on the differences between Companies Act regulation and SEBI Act regulation. What Companies Act is saying and what SEBI Act is saying. After that, we'll understand some provisions relating to code of conduct. After that, we'll understand what are the listed companies' requirements in relation to related party transaction, how they have to disclose, how they have to identify, where they have to disclose, in which manner they have to disclose, within how much time period they have to disclose. Then we'll have a little bit discussion on a vigil mechanism, very small topic, that is nothing but called whistleblowers policy. It is also known as whistleblower policy. I hope you already have understood this concept while doing the section number 177 Companies Act in your intermediate IPCC level. Then we'll have a discussion on subsidiary of a listed entity. We have a discussion on what? Subsidiary of a listed company. We'll understand here कि as a subsidiary of a listed company, what are the requirements of the holding parent company and whether this subsidiary is a material subsidiary or immaterial subsidiary. If it is a material unlisted subsidiary, what are the regulations? And if it is immaterial subsidiary, what are the regulations? Then we'll understand statement of deviations or variations. Now, sometimes what will happen, as a listed company, you issue a prospectus. You generate the lot of funds from the public. You raise the lot of capital from the public. But at the end of the day, if you deviate from the purpose for which you have raised the money, if you have changed the purpose or if you have utilized the money for the purpose other than for which you have raised the money, then in that case, that is called statement of deviation. Let me give you an example. Say, for example, via prospectus, I as a company, listed company, raised 10,000 crore rupees. I told that ki I will open 10 new factories in the backward parts of the country so that I can generate the employment and all. But what I'm doing, I'm using that 10,000 crore rupees for my personal purpose. Off the track you are using. So are you deviating from the objectives for which you have raised the money or not? Yes. So as a listed company, you also have to give the statement of deviations and variations. Next point, as a listed company, you also have to give the disclosure of management discussion and analysis report. It is called management discussion and analysis report. Here we'll give the so many information of our internal control system. We will give the information of our interfirm intrafirm comparisons. We'll give the information about some significant accounting ratios, ratio analysis we are going to basically discuss in that part. Then information to the shareholders, whether the shareholders should know about the board of directors of the company or not. In the board of directors, who is drawing how much of salary, what are their qualifications of the board of directors, what are the past experience of the board of directors. Each and every director's information we have to provide it to whom? Shareholder. That we are going to understand here. Let me tell you one thing, most of the people leave this chapter in choice because they are unable to handle so many provisions in this chapter. But I can guarantee you, I make this particular chapter very simple for you. You will not find even a single rupee difficulty in understanding the whole chapter. Clear, everyone? Then we have stakeholders relationship committee. Various committees what the listed companies have to make. Stakeholders relationship committee is that committee where they will take care of the complaints given by the shareholders in relation to listed company. If they are unhappy with the functioning of the listed company, they can direct right away make the complaint to whom? To the this committee. Then we'll understand transfer and transmission or transposition of the securities. How many shares have been transferred, how many shares have been transmitted. About that report also we have to talk about. Compliance certificate, then we have to also talk about the auditor's compliance certificate in relation to corporate governance. Remember one thing, every listed company must obtain one compliance certificate from the auditor, where the auditor is going to declare, statutory auditor is going to declare ki yes, I say that the company has followed the various rules and regulations of LODR as per the corporate governance rule. Yes. Next one, we'll understand some disclosures. We'll understand some risk management committee. What is this risk management committee? Which will try to mitigate the future risk to the lowest acceptable level. We know that future is uncertain, and wherever there is an uncertainty, there are risks in the organization. So are we going to keep the risk as it is, or we will try to reduce it? We all know that risk is something which cannot be eliminated, but at least it can be reduced. So that is the function of risk management committee. Nomination and remuneration committee. Sir, what do you mean by nomination and remuneration committee? Nomination and remuneration committee is a committee which is going to nominate some directors from the directorship to the senior management. It will also demote you from the senior management to the directors if you're not performing well. So basically, it is checking your performance, by which they will nominate you from one level to another level, or it is the same committee which will determine your remuneration. Are you getting the point or not? So that is why it is known as nomination and remuneration committee. Then we have finally a report on corporate governance, which is required to be issued by the auditor, and the last, how the auditor certificate looks like, that we are going to understand. So in totality you can say that these are the basic 18 points which we should have in mind while doing this chapter. Each and every point is highly important. Each and every point. You can't say that one point is important and one point is not important. Audit committee is a huge topic. Let's do audit committee and some selective points from the other regulations. No. The good thing in this chapter is each and every part of the chapter is important and have been asked in the examination. Clear, everyone? Yes. Shall we proceed? Chalo. So let us proceed with the legal framework of this particular chapter first. So what is the name of the chapter? Audit Committee and Corporate Governance. So mostly in this lecture, we are only going to govern the provisions relating to Audit Committee, and side by side, I already told you, I'm going to prepare notes along with you. Are you getting the point? For your ease, as you all know that I share my class notes also with the students, as they find it highly important, as they find it very much easy to understand. So we are going to prepare notes from here, right? So side by side, we are going to prepare the notes from here. So what is the first topic we are going to understand? The first topic we are going to understand is legal framework. Remember one thing, the material is already distributed to you all, and make sure that you are reading this particular chapter line to line with the material. So let us understand what do you mean by legal framework. So we'll understand the legal framework. We'll do some major things. We'll take out some major points which we think that which are important from the examination point of view, and we'll write it out on the right side. Clear, everyone? So let us understand what do you mean by listing agreements legal framework. Now, first thing we have to understand, what do you mean by LODR? As I already told you, LODR stands for what? Listing obligations and disclosure requirements. So what do you mean by LODR? Listing obligations and what? Disclosure requirements. Sir, what do you mean by listing obligation and disclosure requirements? These are those listing obligation and disclosure requirements which are basically applicable to the listed entities under the SEBI Act 1992. And I have already told you, LODR is nothing but the replacement of Clause 49 agreement. LODR earlier used to be known as Clause 49 agreement, but now LODR is known as, Clause 49 is known as LODR regulation. So listing obligations and disclosure requirements. Now let us see. Listing agreement is a statutorily mandated contract between the listed entity and the stock exchanges. Now, first of all, in the very beginning line only they have used, it is a statutorily mandated contract between whom and whom? Between the listed company and the stock exchange. So if you are a listed entity, you have to follow some rules and regulations under the LODR, which you have to get governed with, which are being posed upon you by the stock exchanges, right? Where it is listed. So you have to follow the LODR regulations of that stock exchange where you are listed. It does not have the authority of a law behind it, right or not? Hence, on September 2, 2015, on which date? September 2, 2015. What happened? On September 2, 2015, the SEBI's Clause 49 listing agreement got replaced by what? LODR. So SEBI issued, the Securities and Exchange Board of India issued listing obligations and disclosure requirements, Regulation 2015, with the objective of streamlining and consolidating the provision of various listing agreements in operation for the different segments of the capital markets. Now let me give you one idea about the this particular thing. अब सुनना इसे ध्यान से. Basically what has happened, suppose your share is listed in the NSE. Your shares are also listed in BSE. Your Indian depository receipts are listed in one another platform. Your mutual funds are listed in one another platform. So different stock exchanges, wherever your securities are listed, it was very much scattered earlier. Now what happened, to streamline all the various regulations and to give a common platform, to give a which platform? Common platform where all your listed securities will be taken care of. That is what do you mean by LODR. Are you getting the point or not? As so many different types of stock exchanges were there, so many different types of stock exchanges are there, that we'll understand in the later part. So many different types of stock exchanges are there. So in the different stock exchanges, your securities are listed over there. It is very much scattered. So you have a tension. I have to follow BSC LODR also. I have to follow NSE LODR also. I have to follow MCX stock exchange LODR also. I have to follow SME stock exchange LODR also. No. Now all the stock exchanges where your different securities are listed have been streamlined at one platform. That is what the basic purpose of replacing the clause 49 listing agreement with the LODR regulation. So let us read it again. Hence, on September 2, 2015, SEBI issued the listing and SEBI and Securities and Exchange Board of India introduced listing obligation and disclosure requirement regulations 2015 LODR regulation. What is objective? Objective number one is streamlining and consolidating. Streamlining and consolidating the provisions of various listing agreements in operation for different segments of the capital markets. So in the different capital markets, your different products are listed. So for all the products, they have now streamlined one particular platform. That platform is known as LODR. Right? Now, say for example, equity shares are listed somewhere, preference shares, equity shares LODRs are different. Equity share LODR are different. Right or not? Preference share LODR is different. Now see, equity share LODRs are different. Preference share LODRs are different. Debt instruments LODRs were different. Units of mutual funds LODR were different. So now all are not required to be placed at the different places. All have been streamlined and consolidated at one platform. So LODR is applicable on your equity shares also, on your preference shares also, on your mutual funds also. Wherever it has been scattered, instead of following the scattered provisions, now it has been streamlined and consolidated. Now securitized debt instruments and any other securities that SEBI may specify. Now we'll understand this in a detailed manner at the later stage. So what we understood from the para number one is, first of all, LODR came when? LODR came on 2nd September 2015. Who introduced? SEBI introduced, in replacement of clause 49 listing agreement. What are the two purposes? The purposes, first purpose is, now try to understand this word, streamlining means what? Scattered things were there, let's streamline it, and consolidation of the provisions of the various listing agreements in the operations for the different segments of capital market. Are you getting the point or not? So basically it streamlined and consolidated the various provisions of the listing agreements in relation to the different segments of the capital markets. Now equity share, preference share, mutual fund, IDR, securitized debt instruments, all are consolidated at one place only. That is what is written in the point number one. Now, as I already told you, LODR is basically a replacement of what? LODR is basically a replacement of what? It is a replacement of clause 49 listing agreement. Now see, LODR regulations also capture the corporate governance principles found in clause 49 of SEBI's model listing agreement. It may be noted that LODR regulations deal with only the post-listing requirements and exclude all the pre-listing requirements. Sir, what do you mean by that? First of all, tell me everyone, what do you mean by listed entity? A listed entity is the one who is registered under at least one recognized stock exchange. So when you are a not listed entity, whether LODR will be applicable to you? No, it will not be applicable to you. So LODR is applicable to you when? Pre-listing or post-listing? It is applicable to when? In the post listing. Are you getting the point or not? So when the LODR is applicable to you, LODR is applicable to you on all the post listing regulations. It talks about, it deals with all the post listing regulations. Pre-listing regulations are not dealt in LODR. L stands for what in the LODR? Listing obligation. So after getting listed only, the things will be applicable to you. And it is a replacement of clause 49 listing agreement. That is what is given in the second paragraph. I hope all of you understood. Yes, sir, we understood. Now, LODR regulations under the regulation number 3 are applicable to whom? Unless otherwise provided, these regulations shall apply to the listed entities who has listed any of the following designated securities on recognized stock exchange. If you are a listed company, listen to me very carefully. Within 1 minute, the whole paragraph will be there inside you. If you are a listed entity and you have any of the following category of the securities listed on any recognized stock exchange, LODR is applicable to you. So point number 1, you should be a listed entity. Point number 2, your securities are also listed. And point number 3, on any of the recognized stock exchange. Now, what kind of recognized stock exchange and what kind of securities? If your securities are what in nature? Specified securities. So what do you mean by specified securities? Equity and convertibles listed on the main board. What do you mean by main board? SEBI or SME exchange or institutional trading platform. This is called as ITP. So if your securities like equity shares and your convertible instruments are listed on the main board, are listed on the SME exchange and or any institutional trading platform, then in that case LODR is applicable to you. So you are a listed company and your any of the following security is listed on a designated recognized stock exchange. Any of the designated securities is listed on a stock exchange, recognized stock exchange. What is the first security we are talking about? Your equity shares or your convertibles are listed on the main board, are listed on what? SME board, or it is listed on ITP, institutional trading platform. Or if you have non-convertible debt securities. What convertible debt securities? Non-convertible debt securities, non-convertible redeemable preference shares, non-convertible debt securities, non-convertible redeemable preference shares, perpetual debt instruments and perpetual non-cumulative preference shares. So if you have non-convertible debt instruments, if you have issued the non-convertible redeemable preference shares, if you have issued the perpetual debenture instruments, or if you have issued the perpetual non-cumulative preference shares and they are listed on any of the stock exchange, then in that case LODR is applicable to you as a listed entity. And if your ideas Indian depository receipts are listed on any of the security exchange, on any of the stock exchange, if your securitized debt instruments are listed, if you have listed your security receipts, if you have listed your units issued by the mutual funds, and if any other security as specified by the board. So this is what brings an end to the introduction of this particular chapter. Are you getting the point? So now we have understood basically the legal framework of this chapter. So let us write and let us see how many points we can basically retain. Now it will create a practice also. Now let us understand how many points basically we can create, right? So let us understand one by one how many points we can retain. So point number one. Point number one. What is the point number one? The point number one is relating to legal framework. Now everything we will put it in one framework. What is the legal framework? Point number one. What is it known as? It is known as LODR. What is the full form of LODR? Listing Obligations and Disclosure Requirements. LODR stands for Listing Obligations and Disclosures Requirement. Sir, point number 2. Is it mandatory? Yes, it is mandatory for listed entities. It is mandatory for which entities? Listed entities. Which listed entities? Those listed entities which have their designated securities listed on any recognized stock exchange, which have their designated securities listed on any recognized stock exchange. Sir, what are those designated securities? Securities number 1, equity and convertibles. Equity and convertibles, if they are listed on main board, if they are listed on SME stock exchanges, or if they are listed on ITP. What is ITP? Institutional Trading Platform. So if your equity shares and convertibles are listed on any of these 3 platforms, then in that case the LODR regulations are applicable to you. Clear everyone? Second one, if you have issued non-convertible, in the non-convertible there were 2 things. In the non-convertible, try to remember 2 things: non-convertible debt securities and non-convertible redeemable preference shares. Non-convertible debt securities and non-convertible redeemable preference shares. And if you have issued perpetual, what? Perpetual. In the perpetual also there were 2. What were there in the perpetual? If you have issued perpetual non-cumulative preference shares and you have issued perpetual debentures. Are you getting the point? So first one, if you have issued equity and convertibles. Second one, if you have issued non-convertible debt securities and redeemable preference shares. If you if you have issued perpetual non-cumulative preference shares and perpetual debentures. So trust me guys, if you will do in this way, like what I'm doing in the video right now, so remember one thing, you need not spend even a single minute at your home in revising it again after watching this video. So we are going to read it from the material and we'll try to retain it and try to write it on the right side. Are you getting the point? Yes. Next point. What is the next security? If you have any Indian depository receipts, that is called IDRs. If you have any mutual funds listed, if you have any securitized instruments, that is basically debt securitized instruments. What type of instruments? Debt securitized instruments. Or if you have any kind of securities receipts, if you have any kind of securities receipts and any other securities specified by board. Correct everyone? So if any of these designated securities, what designated? Equity convertibles, non-convertible debt and redeemable preference shares, perpetual non-cumulative preference shares and debentures, Indian depository receipt, mutual funds, securitized instruments, debt securities receipts, and any other securities specified by the board are listed on any of the recognized stock exchange, then in that case what will happen? In such cases, your listing obligation and disclosure requirements are applicable on you. So I hope all of you understood. So this is the meaning. Yes, it is mandatory. For which class of companies it is mandatory, that also I have written. Now basically, what is the purpose of LODR? Tell me, what is the purpose of LODR? Two purposes. One is streamlining and one is consolidating. One is what? Streamlining and one is consolidating. Sir, what to be streamlined and what to be consolidated? The different listing agreements of different securities. The different listing agreements of different securities. The main purpose was to streamline and consolidate at one platform so that LODR can take care of everything. So if you are having now mutual funds, or if you are having now equity, preference, debt, securitized, are you getting IDR? Everywhere, anywhere, LODR will be applicable. The main purpose is to streamline and consolidate. Remember this word, to streamline and consolidate. So when it came, sir, it came on which day? It came on 2nd September 2015, issued by whom? SEBI Act 1992. Issued by whom? SEBI Act 1992. Are you getting the point? In replacement of what? In replacement of clause 49 listing agreement. Correct, everyone? So in replacement of clause 49 listing agreement. So tell me, is it looking better or not? So we understood each and everything. We understood each and everything relating to legal framework. And one more important thing, what does it cover? What does it cover? I'm telling you, you go in this chapter according to me, and I can guarantee you, you will not find it in the best way which I'm going to teach you. I'm going to make you understand each and every word in a very simplified manner. I'll make this whole chapter simplified for you. So there will be a time coming when you need not see any kind of material which is given on the left side. You have to just simply see the notes and go for the examination. Coverage. What is the coverage? The coverage is post listing. The coverage is post listing requirements. It does not cover any pre-listing requirements. That is what is written in our point number 1 or in our page number 1. So with that, the legal framework of this particular chapter, audit committee and corporate governance, is over. I hope all of you understood. Yes, sir, we understood. Now the main topic will start. Topic number 2, legal framework we understood. Now we are going to understand the audit committee. As I already told you, if we have to understand audit committee from the 2 point of views. Are you getting the point? What are the 2 point of views? Some audit committee, provisions of the audit committee as per Companies Act 2013, and provisions of the audit committee as per what do you say, LODR regulations. So LODR regulations we have on the left side, and the section 177 audit committee as per the Companies Act we have on the right side. So majorly what I'm going to teach you here, what I'm going to make you understand here, I will make you understand majorly the difference between the two. Sir, what kind of difference between the two? The first thing we are going to understand is whether, wait, the first thing we have to understand is whether the LODR and whether the section 177 audit committee is basically same or not. There are some provisions which are very much same, but yes, at the same point of time, they are very much different from each other. So first of all, let's understand कि audit committee as per LODR is applicable to whom, and audit committee as per section number 177 is applicable to whom. Now see, as per LODR, provisions of the audit committee and corporate governance given in the chapter 4 of LODR are applicable to all listed entities, companies that have listed equity shares, convertibles on recognized stock exchange, except the provisions given in regulation number 17 to 27 are not applicable to companies listed on SME, companies with paid up share capital, equity share capital of all these things 10 crores and net worth of 25 crores. So remember one thing, LODR LODR audit committee is applicable to whom? LODR audit committee is applicable to all the listed entities. LODR audit committee is applicable to all the listed entities. But LODR audit committee is not applicable to whom? It is not applicable to those companies which are listed on what? SME exchange, and it is also not applicable to those companies with a paid up equity share capital of less than equal to 10 crores, or the net worth is less than equals to 25 crores. It means if your paid up share capital is more than 10 crores and your net worth is more than 25 crores, then only the LODR regulations are applicable to you. This is as per what? As per SEBI Act. Are you getting the point? So applicability as per the SEBI Act is to all listed entities except two. What are the twos? Those companies which have listed their equity shares on small and medium exchange. Are you getting the point? SME exchange, and those companies whose paid up share capital is less than equals to 10 crores and net worth is less than equal to, or net worth is less than equal to its, and net worth is less than equal to 25 crores. Correct, everyone? So this is what brings an end to the applicability of what? Audit committee. Everyone is clear? So as per SEBI regulations LODR, this is what the applicability. Now as per section number 177, which is as per the Companies Act, what is applicability? As per the Companies Act, it is applicable to section number 177 is applicable to the listed companies. So you all know listed company is a company first. Listed company is a company first. So obviously it is applicable to all listed companies. Yes, which we have already covered under the LODR. Is it applicable to public companies? Yes, it is applicable to those public companies whose paid up share capital is greater than equal to 10 crores, whose outstanding borrowings are greater than equal to 50 crores, and whose turnover is greater than equals to 100 crores. Are you getting the point or not? Remember one thing, very simple. Remember one thing. If you are a listed company, section number 177 audit committee is automatically applicable. If you are a public company other than the listed company, it is applicable when any of the three conditions are satisfied. So what are the three conditions? So paid up share capital should be greater than equal to 10 crores. Their outstanding borrowing should be greater than equals to 50 crores. So turnover should be greater than equals to 100 crores. And if you are a private company, and if you are a which company? Private company, it is not covered at all. For the private company, section number 177 is not at all applicable. Clear everyone? Clear everyone? Okay. So once covered in the limit, it is covered for the 3 consecutive years, excluding unlisted public companies being joint ventures or wholly owned subsidiaries and dormant companies. So once you are covered, it is covered in for the 3 consecutive years. Are you getting the point or not? So listen to this very, very carefully. Suppose any of the 3 conditions are not being satisfied from the second year, third year, fourth year onwards. But are you covered from the year 1 or not? So you are covered in year 1, you are covered in year 2, you are covered in year 3 also, even if your conditions are not satisfied. So once you are covered under the section number 177 to maintain the audit committee for the next what? 3 years. I hope all of you understood. So yes, so what is the first thing we understood the difference? The first difference what we understood is the LODR applicability as per the SEBI Act, and section number 177 applicability as per the Companies Act. So we are also going to do in the same way. We'll write LODR on one side and we'll write section 177 committee on one side. So we'll write LODR on one side and section 177 committee on one side. LODR applicability. What is the first point? First point is relating to applicability. It is applicable to all listed entities. It is applicable to all listed entities except to companies whose equity shares are listed on SME exchange, small and medium exchange, and those companies whose paid up share capital, equity paid up share capital is less than equal to 10 crores and whose net worth is less than equal to 25 crores. Clear? This is the applicability of LODR audit committee. Now what is the applicability of section number 177 audit committee? Section number 177 audit committee is applicable to first of all to all listed companies. Other than listed companies, it is applicable if any of the 3 conditions are satisfied. So what are the 3 conditions? Paid up share capital should be greater than equal to 10 crores, or outstanding borrowings should be greater than equal to 25 crores, or sorry, not 25 crores, 50 crores, greater than equals to 50 crores, or turnover is greater than equals to 100 crores. Are you getting the point? And where we have to see all these three figures, we have to see it on last audited financial statement. So we have to see it or tested it on last audited financial statement. And you already know that once it is covered, you are covered for the 3 consecutive years. So let us see whether we have done it correctly or not. So this is what the LODR. And let me tell you one thing, outstanding borrowings, when I'm talking about the other than listed companies, outstanding borrowings means it includes borrowings, debentures, deposits, outstanding greater than equals to. So you have to put greater than equals to here. It is not only greater than, it is greater than equals to here. So let me put me here. Let me put it here. So greater than equals to 50. Clear, everyone? Yes, sir. We are clear, right? And what is written? It is to be seen where? It is to be seen as per the last audited financial statement and as per the Appointment and Qualification Directors Rules 2014, once covered in the limit covered for 3 consecutive years, excluding unlisted public companies being joint ventures and wholly owned subsidiaries and dormant companies. So if you are the unlisted public company, which is a joint venture, or you are a wholly owned subsidiary and a dormant company, then in that case, this 3 years provision is not applicable to you. So this is what do you mean by applicability of LODR as per applicability of audit committee as per LODR and applicability of audit committee as per section number 177. Right or not? So we are done with the applicability part. We are done with the which part? Applicability. So many points are there. Don't worry. I told you na. Audit committee topic is a very huge topic. So many other points are there. So are we done with the legal framework? Sir, yes. Sir, are we done with the audit committee applicability? Yes. Now we are going to understand next point. Minimum number of directors. What should be the composition of audit committee? Sir, whether it is LODR audit committee or it is a section number 177 audit committee, minimum 3 members are required on both the sides. That is common. Minimum 3 members are required on the both the sides. How many should be the non-executive directors? That is not applicable, not applicable. But there is one problem. What is the problem? Yes. Out of the total composition of the directors or the members of the audit committee, minimum 2/3 should be independent directors if it is LODR audit committee. How many minimum? 2/3 should be independent directors if it is LODR audit committee, and in case of audit committee of section number 177, there we only need majority. So let me give you the clear idea. Suppose if it is LODR and there are total 9 directors in your audit committee. Now what is the 2/3 of 9? It comes to 6. Are you getting the point? 2/3 of the 9, it comes to 6. But if it is an audit committee as per section number 177, we don't need 2/3. There are 9 members, we need majority. If you are having 5 independent directors out of 9, that is also fine. That is a major difference between LODR audit committee and this audit committee, section number 177. So you can see that how many minimum members? Sir, 3 minimum members on both the side. Minimum non-executive directors, not applicable. Minimum independent directors, 2/3. And here, majority. Did you get the point? 2/3. And here what? Majority. Right or not? Now there is one amendment here. In case of those listed entities having outstanding special right equity shares, having outstanding superior right equity shares. Are you getting the point? Remember one thing, those listed companies having outstanding superior right equity shares, then the audit committee of those listed companies shall comprise of only independent directors, then not 2/3. Total should be independent directors. Sir, which listed companies? Those listed companies which are having outstanding superior rights equity shares. Remember one thing, outstanding superior right equity shares. In those companies, the total audit committee should be comprising all the independent directors. 2/3 is applicable to other than these listed entities. This is a small amendment. I told you now, so many amendments are there in this particular topic. So I hope we all understood. Next, listen to this very carefully. When audit committee is being incorporated in the company, whether a non-listed company or a listed company, do we want the members to be financial literate or not? Now, sir, what do you mean by financial literate? I'm not talking about the literate. Literate means only educated. I want financial education. They should know how to read and understand the financial statements. That is called financial literacy. They should have the background of finance. They should have the background of accountancy. They should have the knowledge of these two fields. So, if you are a listed entities, audit committee as per LODR, all the members of your committee should be what? Financial literate, whereas as per Companies Act, majority including chairperson should be the financial literate. So we here need all, and we need here majority including chairperson. So you can see that where more strict provisions are there in the LODR, in the Companies Act or LODR SEBI Act is more stringent as compared to the majority. Now, all should be financial literate. It is fine. All should be financial literate. Now, Companies Act is saying that all are financial literate. That is enough. But SEBI Act LODR is saying that out of all financial literate people, we need one as an financial expert. So at least one should be what? Financial management or accounting expert. At least one person should be financial management and accounting expert among all the financial literate people. So there are total 9 members. All 9 members should be what? Financial literate. But among those 9, one should be what? Financial expert. Clear? Yes. Now, who is going to chair the audit committee under LODR? It is to be chaired by independent director, and independent director should be present at the AGM. That independent director who is chairing the audit committee as per LODR, it means first of all, so we understood who can chair the LODR audit committee. Who can chair the LODR audit committee? Only independent director can chair the LODR audit committee. Who can chair? Only independent director. And being a chairperson of the audit committee of a LODR of a listed company, you have to be present in the AGM. But here, the person to be financially literate, that is more than enough. The person should be which literate? Financial literate, that is more than enough. Not compulsorily to be chaired by whom? Independent director, right? Next, company secretary of the company. Company secretary of the company is going to be the secretary of the audit committee in case of listed entity. In the listed entity, the one who is working as a company secretary must also work as a secretary of this audit committee. That is not required in case of what? Companies Act. So you can see now, you can feel now how LODR audit committee is more stringent, more strict as compared to the Companies Act section number 177 audit committee. Are you getting the point or not? So let us finish off this part first and then we'll move to the next one. Now, second thing, I will ask you some points. You keep on telling me the differences. So let us write the differences. Point number one. Point number one. What is a composition we need? Point number one. What is a composition we need? Here also minimum 3 members we need. Here also minimum 3 members we need. Do we need non-executive directors? Not applicable. Not applicable. Do we need independent directors? Yes. At least 2/3 must be what? Independent directors. Here at least 2/3 of majority. Here majority should be independent director. Where majority? When it comes to Companies Act section number 177 audit committee. But I already told you that there is one amendment. So what is the amendment? If it is a listed company with outstanding superior rights equity shares, then in its audit committee, only independent directors are required. Only independent directors are required. Only independent director means what? All should be independent directors. all should be independent directors, but that is not required in case of what? Companies Act 177. Next point, financial literacy. In the case of financial literacy, here all should be financial literate. Here all, or here majority should be financial literate. Majority should be financial literate. But among all, do we need one financial expert? So financial management and accounting expert, how many people? At least one. We need at least one here, but in case of Companies Act, not applicable. Who is going to be the secretary of the audit committee under the LODR? So secretary. So CS of the listed company will become the secretary of audit committee. The secretary of the company will become the secretary of the company. Secretary of the company will become the secretary of the audit committee. But what is the provision here? Not applicable. Are you understanding the point? Who is going to chair? Who is going to be the chairperson of audit committee as per LODR? Who is going to be the chairperson of the audit committee as per LODR? The person who is going to chair is known as independent director only, and he must be present at AGM, but there is no requirement in case of this thing. It means if you are a financial literate, you can become the chairperson of an audit committee. If you are a financial literate, you can become a chairperson of an audit committee under section 177 of Companies Act 2013. I hope now you are understanding this chapter is very easy. The only thing is you need to understand the differences between the toughness of the LODR regulation as compared to the unlisted company under the Companies Act. Clear? Now, next one. Invitees. Who is going to be invitee? It means in the LODR audit committee, who can be present in their meetings? Finance director can be present in the meeting of audit committee. Head of finance department can be present in the audit committee. Head of internal auditor can be present in the audit committee. Statutory auditor, etc. may be invited. These people may attend the audit committee meeting of LODR, but no such provision is given under which act? Companies Act. Are you getting the point? Now, how many times audit committee has to meet in 1 year? In 1 calendar year, they have to conduct at least 4 audit committee meetings. How many audit committee meetings? 4 audit committee meetings they have to conduct, and with a maximum gap of 120 days between the 2 audit committee meetings. How much is the maximum gap? 120 days between the 2 audit committee meetings. Clear, everyone? So everyone just try to understand how many meetings they have to conduct. 4 audit committee meetings they have to conduct. Are you getting the point? And how much should be the gap between the 2 meetings? Maximum gap should be 120 days. But that provision is not there under which act? Companies Act. Clear, everyone? First of all, there can be some invitees as per the LODR, because listed company needs head of the finance department, head of the internal audit department, finance director, or statutory auditor. But in this case, not required. How many meetings? 4 meetings. In this case, no such provision. What is the maximum gap between the 2 audit committee meetings? 120 days. No such provision. What should be the quorum? Yes, that is very important. What should be the quorum? 2 or 1/3 of the audit committee strength, whichever is higher. 2 or 1/3 of the strength of the audit committee, whichever is higher, with minimum 2 independent directors to be present. And what is the quorum in case of Companies Act? No special provision. So this is what brings an end to the differences between what? Audit committee of the LODR and audit committee of the Companies Act. So let us write the major differences. First point, who can be invitee in the LODR audit committee? Statutory auditor allowed. Head of internal audit department allowed. Then finance director is allowed, and head of finance department is also allowed. But there, no such provision. Anybody can come in the meeting. Next point, how many meetings in a calendar year. Now here, minimum 4 meetings. Minimum how many meetings? 4 meetings of audit committee. 4 audit committee meetings are required. And here, no such provision. As many you can do. Less than 4 also you can do. Nothing is specified in the Companies Act. Next point, gap between 2 audit committee meetings. Now, minimum maximum gap of 120 days. What is the maximum gap of? 120 days, where there is no such provision. There is no such provision. So revision bhi ho ja rahi, notes bhi ban ja rahe. We are doing the revision also, we are reading the material also, notes are also getting prepared. What else you want? And most important thing, quorum. How many people should be present when the audit committee meeting is going on? Quorum means what? The minimum number of requirement of the people to be present in a meeting to make it a valid meeting. How much is a quorum? It is 2 or 1/3, whichever is higher. Whichever is what? Higher. 2 or 1/3, whichever is higher. Clear? Next point. With minimum presence of 2 independent directors. So let me give you one example here. There are total 5 members in the audit committee. What is the 2 or 1/3? What is the 1/3 of 5? Tell me, what is the 1/3 of 5? It is 1.666, right or not? 1.666 means 2. 2 or 2, whichever is higher, 2. Those 2 who are present in the meeting should be the independent director. Remember one thing, if the 2 persons are present in the audit committee meeting as a quorum, both of them, at least 2 independent directors should always be there in the meeting. Tell me one thing, 9 members are there. 2 or 1/3 of the 9? 3. Whichever is higher, 3. Out of those 3, 2 should be independent. Are you getting the point or not? So yes. So whatever the quorum is present, at least 2 should be what? Independent director. That you have to always remember. 2 should be what? Independent director. But when it comes to what? Companies Act, no such proof. So this is what brings an end to the differences between audit committee as per LODR and audit committee as per section number 177, where we understood the applicability, to whom it is applicable, to whom it is not applicable, to whom that is applicable, to whom it is not applicable. Then we understood composition. Then we understood how many non-executive directors are required. Then we understood how many independent directors are required. And we also did a very important amendment relating to those listed companies which are having outstanding superior rights equity shares. Correct, everyone? In its audit committee, only independent director, means all the directors should be independent. But there what we need? Majority. Here financial literacy, all. There majority. Here one should be financial expert, but there not required. Here secretary, company secretary of the company will become the secretary of the audit committee. There not required. Who should be the chairperson? Only independent director can be the chairperson. Only independent, and he should be present in the AGM. But where? There. Only financial literate if you are enough, that is fine. Now, invitee, the statutory director, independent director, finance director, or head of the finance department can be there, and they're not applicable. How many meetings in a current year? Minimum 4 audit committee meetings in a current year. Provision. Next one, what should be the gap? Maximum 120 days. Provision. What should be the quorum? 2 or 1/3, whichever is higher. Provision. But in case the quorum is present, at least 2 should always be the which director? Independent director. I hope everyone is crystal clear up to this point. Yes sir, we are clear. I hope up to now, up to this topic, everyone has understood what this audit committee is all about. So you can understand from the various differences ki LODR audit committee is more strict, more stringent as compared to section number 177 audit committee. Clear everyone? Right everyone? Chalo. So let us understand the remaining part. Don't be under the impression audit committee is over. Difference is only over. Right now, so many other things are there in the audit committee, and they're very intellectual provisions. If you carefully analyze now, you will understand ki why listed companies have to undergo through so many stringent or strict restrictions. You will understand slowly. Now, first of all, this is a very interesting topic. I will tell you one idea and I'll tell you how to, how to conquer this idea. Now, in the next topic, what we are going to understand ki audit committee shall have some powers which should include the following. Are you getting the point? First, we understand its powers. Are you getting the point? Then we have to understand some of the roles of the audit committee. There, I will tell you one trick what you can use. Are you getting the point? There, I will tell you one trick what you can use. Now, first of all, let us understand the powers of the audit committee. Now, what are the powers of the audit committee? Now, audit committee is more powerful than the board of directors. Yes, board of directors will do everything on the recommendations of audit committee nowadays. It's a very revolutionary step taken under the SEBI and Companies Act, as you can see now from the various provisions what we have completed so far. Correct, everyone? Yes, sir. Now, audit committee is what? Audit committee can investigate any activity within its terms of reference. Sir, audit committee is a limitless committee. It can investigate any area, any department, any subsidiary, any point of time, any person, any officer, any employee. It can investigate any kind of activity at any point of time. And if the audit committee wants, it can seek any kind of information from any employee. That's what I told you just now. Sir, any entity, any activity, any employee at any point of time. So you can understand any word. It means audit committee is having limited powers, or you can say that it is limitless. To an extent, we can call it as a limitless, right? So it is having a power to investigate any activity within its terms of reference. It can seek any information from any employee. And remember one thing, whenever the audit committee will think that I am in need of any legal or any professional advice, it will think that I need any legal or professional advice, they can hire the legal experts and professionals for such advice. That is what the power of audit committee. And sometimes you need experts from the other field to understand the concept. Let me give you one very example. Now, I am one of the independent director of the audit committee. Now, I want to know the manufacturing process of making the medicines in the Dr. Renbex's laboratory limited. Now, am I a doctor? Am I a pharmacist? Am I a chemical engineer that I will understand all the formulas? Answer is no. I am just a financial literate person who has been appointed as an independent director of an audit committee. But I want to know whether their manufacturing process is genuine or not. So I will hire a chemical engineer or a pharmacist who along with me will check out the whole manufacturing process. Now, the expert of that field is not me. Expert of that field is that chemical engineer, SA 620, using the work of an auditor's expert. When the auditor also sometimes is in need of using the work of an expert or not, so there we apply SA 620 using the work of an auditor's expert. Here also, as a member of audit committee, if you think that you need to hire an expert from the another field, you can hire it bindas, no problem at all. So basically, what are the four powers we have done? There are five powers. I'll tell you fifth one also. What are the four powers we have done? The four powers of the audit committee. Point number one, it can investigate any activity. Point number two, it can seek any kind of information from any person. Point number three, whenever it is in need of any legal or professional advice, it can ask it and it may hire those person. And in case need arises, they may hire an expert from the outsides also. Are you getting the point or not? And remember one thing, whatever the powers we are doing, they are not exhaustive. This is not the only powers of audit committee. It may increase or it may decrease. It means it is inclusive powers. These are not exhaustive powers. This is just an example to tell you that these are the various powers. And if the board of director wants, they can give more of their powers to the audit committee. Already audit committee has taken so many powers of the board of directors. If the board of directors want, they can give some extra powers to the board of audit committee also. So let us understand what are the powers now. So I hope till now you might have retained it. What are the powers of the audit committee? You can easily tell me, I know. So what are the powers of audit committee? it is broadly classified into 4. What are the powers of audit committee, sir? It can investigate any activity going on at any point of time. Sir, it can seek information from any employee. Sir, it can take any legal or professional advice whenever it wants. Sir, it can also hire experts for outside consultation. Am I correct or not? And what are the two things we understood? First of all, these are not exhaustive powers. These are illustrative powers. These are just an examples. Are you getting the point? And second thing, if the board want, they may delegate some extra powers. They may delegate some extra powers. I hope all of you will agree with me. So this is what do you mean by the powers of audit committee? Very small topic, right or not? Now I hope now it might be looking very easy to all of you. Yes. So next we are going to understand is role of audit committee. What is the next thing we have to understand? Role of audit committee. Now what do you mean by role of audit committee? Try to understand. If you all know the all the 16 clauses of CARO 2016 under section number 143 subsection 11 of the Companies Act 2013, then it is very easy for you to retain the so many rules of the audit committee. I'm telling you, this approximately is going to go to approximately 2 pages. Rather, it is going to 2.5 pages. Are you getting the point? The role of the audit committee generally is going to 2.5 pages. So I will make it very easy for you. But I will not only tell you the trick, I will tell you to do something in addition to the trick also. So what we'll do is, so tell me one thing, in the CARO 2016, how many clauses were there? Tell me, how many clauses were there? Sir, 16 clauses were there. And we all have understood it in a very exhaustive manner. How many clauses were there? So 16 clauses were there, and we have understood that in a little bit of what? Exhaustive manner. Did we understand it in exhaustive manner? Yes, sir. We understood it in exhaustive manner. Now, out of all the 16 clauses, try to remember, you have to prefix every clause with the word called to monitor. This is what the role of audit committee. Sir, how? To monitor, you have to prefix in every clause name. Now, out of these 16 clauses, just you have to accept, just you don't have to consider clause number 6, clause number 12, clause number 16, which is cost records, which is chit fund and nidhi companies, and which is NBFC registration with RBI. In these 3 clauses, you just leave. It means out of 16 clauses, what are the remaining clauses left? The remaining clauses left are 13. In all the 13 clauses names, if you remember, you just have to use the word called to monitor and your half of the role of audit committee is over. Other than that, 9 to 10 points I will make you understand more. So 13 plus 10, total 23 role of audit committee will be there in your pocket. Clear everyone? So it is my own R&D which I have done. That's how I make you understand the role of audit committee. Now in the role of audit committee, let's understand 13 rules we already know. So in the role of audit committee, if we say in the role of audit committee, 13 rules we already know. So point number 1 to point number 13, which is the role or functions of audit committee, we are already ready. Already ready. Sir, how we are ready? We are ready with these points. We are ready with what? We are ready with these points. How many clauses are there? 16 clauses are there. What 3 clauses you have to leave? 6, 12, 16. In the remaining clauses, if you know the heading, just put the word to monitor. Let's understand. To monitor the fixed assets of the company. To monitor the inventories of the company. To monitor the related party loans of the company. To monitor what? And I will show you all these points also. To monitor the intercorporate loans of the company. To monitor that public deposits are being repaid, have not been defaulted. To 6 point, no, Clause number 6 we don't have to do. Clause number 7. What is the clause number 7? To monitor that undisputed statutory dues have been paid on time. To monitor that company is successfully repaying all its borrowings. To monitor that if the company has raised any IPO, FPO, debentures or term loans, the end use of such borrowings are being properly utilized. To monitor that if there is any kind of fraud which have taken place in the organization, and it is to be reported to the audit committee under section 143 subsection 12. To monitor that managerial remuneration has been paid in accordance with section number 197 to all the KMPs and directors. So again, clause number 12 come, leave it. Clause number 13, to monitor the related party transactions which have been covered under the omnibus approval of audit committee. To ensure that if the company has gone for any private placement of the shares or the preferential allotment of the shares, whether the end use borrowings of those raised share capital is being properly utilized or not. And clause number 15, to monitor that the company should not have entered into any kind of non-cash transaction with the director. If entered, must have complied with section number 192. Quickly, ऐसा रिवाइज हुआ है नहीं हुआ? Yes, we understood. So 1 to 13 points of the roles and functions of audit committee we have already consumed inside us, because we know all the 16 clauses of CARO. Under the CARO 2016, clause number 6, clause number 12, clause number 16 we have to leave. In all the remaining clauses headings we have to use a word called to monitor, and our 13 points will be over. This is what to monitor you have to use in all the 13. Now sir, what about the remaining points? You to promised us so many points. Yes, I will tell you what are the remaining points. Now listen to this carefully. Now what are the remaining points you have to remember? The remaining points what you have to remember is, so it means we are going to write it from point number 14. So let us read one by one, right or no? And let us see how many points we have already covered as per our material, and whatever the remaining points are there, after reading we'll write it here. Yes everyone? Yes sir, clear. Now see, oversight, the point number 1 is oversight the listing entity's financial reporting process and disclosure of its financial information to ensure that financial statement is correct, sufficient and credible. So it is the audit committee's responsibility to see that the financial reporting framework has been properly followed while preparing the financial statements, so that they can say that the financial statements are correct, sufficient and reliable. Yes, point number 2, recommendation for appointment, remuneration and terms of appointment of auditors of listed company. However, in case of government companies, it is limited to the recommendation for remuneration only. Now, if you are a non-government listed company, it is the audit committee which will recommend the appointment, which will recommend the remuneration, which will recommend the terms of appointment of the auditor of a company. But if you are a government listed company, that all will be done by the C&AG. Here audit committee will only decide what? Remuneration. That is a small amendment. So other than those 13, are you able to understand these two? Pehle tha oversight and then this. Then approval of payment to statutory auditors for any other services rendered by the statutory auditors. We are not talking about the audit fees. Audit fees they will not approve, sir. Remember section number 142. Who determines the auditor's fees? Who determines the auditor's remuneration? Auditor's remuneration will be determined the person who appoints him. First director in case of first auditor, directors in case of first auditor, and members in case of what? Subsequent auditor. So they will determine. We are talking about remuneration for the other services rendered by the statutory auditor. We are talking about the advisory services what he is rendering. Audit fees will not be determined by audit committee. Other services remuneration will be determined by the audit committee. Are you getting the point or not? Now, who used to review the annual returns? Who used to review the auditor's report? Who used to review the financial statement board? But now, role with respect to financial statement and audit report, reviewing with the management and the annual financial statements and auditor's report thereon before submission to the board for approval with particulars reference to. Before any audit report or before any financial statement have been given to the board of directors for approval, before the approval of the board of directors, it is required to be reviewed by which committee? Audit committee. I told you na, most of the functions of the board of directors have been taken away and it has been given here. Clear everyone? I hope everyone is clear. Yes, everyone? Yes. Okay, now let us understand next thing. What are those things, matters required to be included in the director responsibility statement, what it is going to review, changes if any in the accounting policies and practices it is going to review, and the reasons for the same, major accounting entries involving estimates based on exercise of judgment by the management, significant adjustment made in the financial statement arising out of audit finding, compliance with the listing and other legal requirements, disclosures of any related party transactions, and modified opinion in the draft audit report. So these are the various things which are required to be first reviewed by whom? Audit committee, before these things are being sent to board of directors for approval basis. Clear? Reviewing with the management the quarterly financial statement before submission to the board of directors for quarterly financial statements are also required to be reviewed by the board of directors. Reviewing of those quarterly financial statements is also going to be done by whom? Audit committee. So let us see whether we can retain all these points or not. So let us write the point number 14. Okay, sir, what is the point number 14? Oversight of financial reporting framework on financial statements. So it has to check that if financial reporting framework on financial statement is adopted, due to which, so that they can say that such financial statements are reliable, correct? Such financial statements are reliable, correct? And what? What was the last word? And it is what? Credible. Yes, reliable, correct, and credible. True, fair, correct, and reliable. Or you can say that sufficient also. Correct, everyone? It is sufficient, correct, credible, and reliable. Clear? Okay, point number 14. In the point number 15, now it is the audit committee which is going to recommend what? It is going to recommend what? Appointment, remuneration, terms of appointment. It is going to recommend the appointment, remuneration, and terms of appointment of a which auditor? Statutory auditor. To whom? To the board of directors. It is going to recommend it. Are you getting the point? It is going to recommend it. But in case of amendment is saying, in case of government companies, audit committee is limited to remuneration recommendation only. They cannot recommend the appointment, they cannot recommend the terms of appointment. So why? Because C&AG is involved in that case. Clear? Next one. It is the audit committee which will approve the remuneration of statutory auditor for audit services or other services, for the other services. Correct? For the which services? Other services. It will approve the remuneration of a statutory auditor for which services? Other services. Next point. 17. Before the audit report and before the auditor's report and financial statements are sent to the board of director for approval, audit committee with the management will review the auditor's report and financial statement. Audit committee with management will review the auditor's report and financial statements with respect to what? With respect to you can say that accounting estimates, with respect to accounting estimates, with respect to director's responsibility statement matters, director responsibility statement matters, with respect to major changes in financial statements occurred, with respect to accounting policies, with respect to what? Accounting policies, etc. All these are the various matters which are required to be reviewed by the audit committee by sitting along with whom? Management, before sending the auditor's report and before sending the financial statement to the board of directors. For which purpose? Approval purpose. Clear, everyone? Yes, sir. We are clear. So are we able to retain that many points? Yes, we are able to retain that many points. And point number 18. What is the point number 18? We have done all this point. So review along with management. Review along with management. What is to be reviewed along with the management? The review is required to be done along with the management relating to quarterly financial statements also. Relating to which financial statements? Quarterly financial statements, which are required to be sent to the board of director. For which purpose? Sir, for approval purpose. For which purpose? Approval purpose. Are you getting the point? They have to review along with the management quarterly financial statements. Along with the management, they have to review that before it is sent to the board of director for approval. So this brings an end to how many roles now? 18 roles, we can say. How many roles we are done with? 18 roles. Next one. Reviewing the management. Now see this point. Reviewing the management, the statement of uses and application of funds raised through an issue of public issue and right issue. So can I say that this point we have already covered in clause number 9 of CARO 2016? Yes, yes, we have covered. Monitoring the utilization of proceeds. Now read it once. Reviewing the management, the statement of uses and application of funds raised through an issue, public issue, right issue, or preferential issue. Now clause number 9 plus clause number 14, both are covered here. If you have raised the issues via IPO, or if you have raised the issue via private placement, whether the uses and application of the funds are as per the purposes for which it was raised or not. If it is other than the purposes, then the report submitted by the monitoring agency monitor the utilization of proceeds of a public and right issue and making appropriate recommendations to the board to take up the steps in this matter. So in case the board of directors are misutilizing the funds, they are deviating from using the funds for which purpose they have raised, then in that case, on the basis of the monitoring agency's report, the audit committee will give some recommendations to the board of directors to take some reasonable steps. Ki bhaiya, monitoring committee has confirmed me that there are some areas where you are deviating from the uses of funds which we have raised via public issue. So please don't deviate, take the necessary steps. And not only that, it is the audit committee who is going to always keep an eye on auditor's independence and his performance and his effectiveness of audit process. Suppose I'm a statutory auditor. So what, as a statutory auditor, what the audit committee is doing? Audit committee is always watching me, whether my performance, whether my independence, and whether my effectiveness of audit process is maintained throughout the audit or not. So it is always watching me. Are you getting the point? Next point, approval or any subsequent modification of transactions of listed entities with the related party. So remember one thing, whenever the company will do any kind of related party with the any kind of related party transaction with the related party, omnibus approval of the audit committee is required. What is the word I'm using? Omnibus approval. That we'll understand later on. Next one, scrutinize the intercorporate loans and advances. Did we do it in the CARO point number 4 or not? Yes, to monitor the intercorporate loans. Next one, valuation of undertakings or assets of the listed entity wherever it is necessary. Did we monitor it in the clause number 1 of CARO or not? Yes, assets point. Evaluation of the internal financial controls and the risk management system. So instead of board of directors, now the audit committee is the one which is going to review the internal control financial systems of the entity and the risk management control. Next, reviewing the adequacy of internal audit function, whether the internal audit function, its department, its staff, are you getting the point? Its head of the internal audit department, are they all are adequate, commensurating with the size and nature of the entity or not? Are they efficient? Are they good or not? That also is going to be washed out by whom? Audit committee. Or whether the structure is enough or not. All these are nothing but the roles and functions of audit committee. Discuss with internal auditors of any significant findings and follow up thereon. They will call the internal auditors, please come to me. What are these problems? And they will keep on discussing with them. Okay, what are these findings? And they will keep on doing the follow-up. Okay, are these findings have been rectified by the management or not? Reviewing the findings of any internal investigations by the internal auditors into the matters where there is a suspected fraud or irregularity or failure of internal control systems of material nature and reporting the matter to the board. if the internal auditor comes to the audit committee, sir, I have a suspicion that there is a fraud or irregularity or there is a failure of what internal control systems, which is very much material in nature. So it will report it to the audit committee, who will report, internal auditor will report it to the audit committee, and audit committee will report it to the board. And discussion with the statutory auditors before what the audit commences about the nature and the scope of audit, as well as the post audit discussions to ascertain any area of concern. What should be the nature of the audit, internal or external? Anna, what should be the scope, what you can do, what you can't do, all those things the statutory auditor need to discuss with the which audit committee. And these are pre-audit matters. Then post-audit matters concerns, if any, that will also be discussed with the audit committee. Clear, everyone? So 3 points are relating to discussion. 1 point is relating to statutory auditors. 1 point is relating to internal investigations reported by internal audit. 1 point is relating to internal auditors and doing the discussing with the findings and follow-up. And basically, if you'll see that there are 3 points relating to internal audit. 3 points. So we will write it in a different manner. Okay. Now it is also going to discuss or evaluate internal financial controls and risk management procedures, valuation of undertakings, intercorporate loans, approval of subsequent and modification of transactions with related parties, reviewing and monitoring the procedures. Now let us see how many we can retain now. Already 18 points we have monitored. How many points we have monitored? 18 points we have monitored. Clear, everyone? Yes. So how 18 points? 13 points relating to Caro points, by which we included the word to monitor first, and remaining 5 points. Right now, what are the 5 points we wrote? The 5 points what we wrote: oversight of financial reporting framework, recommendation of appointment remuneration terms of statutory auditor, approve remuneration of statutory auditor for other services. Then before audit report and financial statement sent to the board, audit committee with the management will review it, and it is also going to review the quarterly financial statement. 19 points. Let us write its point again. To ensure that proceeds of IPO issue, FPO issue, private placements are being utilized for purposes, are being utilized for the correct purposes, for the correct purposes. And if monitoring agency claims any kind of departure, means what, deviation, then audit committee must report it to board to take necessary steps. Correct, everyone? This is a point number 19. This is a point number 19. Point number 20. To monitor intercorporate loans. To monitor which loans? Intercorporate loans. 21st point. What is the 21st point? To ensure that related party transactions are approved by audit committee and board first before it takes place. To approve the related party transactions by the board and audit committee itself. Point number 22. Point number 22. To always monitor performance, independence, and efficiency of which auditor? Statutory auditor. Of which auditor? Statutory auditor. So point number 23. To monitor, tell me, to monitor what? To monitor what? So to monitor the internal financial control systems and risk management process of the company, internal financial control systems and risk management process of the company. Point number 24. Now, 3 points relating to internal auditor and 1 point relating to statutory auditor. Do you remember our technique or not? To discuss, matters reported by internal auditor and to do follow up. Matters discussed by the internal auditor and to do follow up. Next one, to discuss investigation on inefficiency or limitation on internal control system reported by internal auditor. What kind of investigation? If they think that that particular matter in which the internal control system is failing is material and significant, right? If the internal auditor tells to the audit committee that if this particular internal control system is a complete failure, or it is complete limited, it is complete inefficient, or it is a complete departure from what they are supposed to do, and it is material and significant, then the audit committee will discuss this matter with the internal audit team and plus report to the board. If there is a problem going on in our internal control system. And what is the point number 3? And what is the point number 3? Now listen to this very carefully. What is the point number 3? Third point relating to internal auditor. Whether structure, staff, performance, head of internal audit department is adequate or not. And most importantly, point number 25. I told you 23, but point number 25. Now, good thing is that, sir, so many students will say, so that many rules, how will be able to understand? You don't have to learn these rules. You have to understand these rules. They can ask you anything by drafting a question in the examination. Does it cover as a role of audit committee or not? Or they will ask you, say for example, internal auditor found some weaknesses in their internal control system, which he thinks that it's a complete failure and material departure from what they're supposed to do. As an audit committee, what you are supposed to do? So you will say that you will discuss it with the internal auditor, and if it is material and very much important in nature, you are going to report it to the board of directors. So main thing is not learning them. Sir, how many points we are going to learn? You are not stopping at all. Main thing is whether you are understanding this or not. These are what the powers, roles and functions of what? Audit committee. If any question will be drafted in such manner, you should be in a position to do it in that way. Clear everyone? So point number 25. 1 point is relating to statutory auditor. To discuss with statutory auditor, 2 things: nature, scope of audit, plus post-audit concerns. So I hope with this you have almost understood all the roles of what? Audit committee. So first 13 roles we already know, and I again repeated one intercorporate point and related party point, and this what do you say, fixed assets wala point, and also this what do you say, this intercorporate loan, related party, fixed assets, and 1 point relating to end use of the borrowings. I have already written it under the Caro points, but again I repeated it and wrote it again so that you can skip. But make sure that if you are unable to write this question in the examination, what are the main particular roles of the audit committee, then you can always jump to the trick of Caro 2016, where all the clauses will be considered to be prefixed with the word called to monitor, except the clause number 6, except the clause number 12 and accept the clause number 16, right? So let us understand the last two, three functions which we are left with. What are the last two, three functions? Now see, to look into the substantial defaults in the payment to the depositors that I already covered in the Caro point clause number 5. Yes, to review the functioning of the whistleblower policy, that is nothing but called vigil mechanism. I will tell you what is whistleblower policies. Just wait for the moment. Anyways, we have this separate concept to be discussed in this chapter, right? Approval of appointment of chief financial officer after assessing the qualification, experience and background etc. of the candidate. Carrying out, it means audit committee is the one who is going to check the, or who is going to approve the appointment of CFO. Now look at this point. CFO is a very huge person, right or not? Now audit committee is going to decide whether that CFO is an efficient employee or not on the basis of his qualification, experience and the background of a candidate. Clear everyone? So you can understand how audit committee is important. Next point, carrying out any other function as mentioned in the terms of reference of audit committee, reviewing the utilization of loans and advances from or investment by the holding company in the subsidiary company exceeding rupees 100 crores or 10% of the asset size of the subsidiary, whichever is lower, including existing loans, advances, investments existing as on the date of coming into force of this provision. Correct everyone? So they are saying that the audit committee is also going to review those kind of loans or advances which have been taken from the holding, or which have been taken from the holding company by the subsidiary company or invested by the holding company in the subsidiary company, which is exceeding how much? 100 crores or 10% of the asset size of the subsidiary, whichever is lower, including their existing loans. So all these are nothing but the functions and roles of audit committee. So let us just complete it. Substantial defaults, deposit point, we don't have to write. We have already covered under Caro. So you can write there as we have already covered it under Caro points, right? We have already covered it under Caro points. Next, whistleblower policy, that will cover under vigil mechanism point later on, but we'll write it. Next, appointment of CFO wala point, and one is carrying out other functions which are referred and utilization of loans. Now let us wind up this topic. So what is the point number 26? What is the point number 26? So tell me, what is the point number 26? To approve vigil mechanism or whistleblowers policy. Point number 7. I will tell you what is whistleblower policy. Just wait for a correct time to understand it. Next point. What is the point number next? Point number, to approve the appointment of CFO, Chief Financial Officer, on the basis of his experience, on the basis of his qualification, on the basis of his background. Are you getting the point? So this is going to be approved by the audit committee whether this CFO deserves to be the CFO of the company or not. Right everyone? So point number 28. Point number 28 is to ensure the other functions as per reference. If anybody will refer the audit committee any other kind of work, audit committee will do that function also. And point number 29 is going to be utilization of loans and advances or investment by holding company in subsidiary. Utilization of loans and advances made by the holding company. It is to monitor the utilization of loans and advances made by the holding company in its subsidiary company which is exceeding 100 crores, means greater than 100 crores, or 10% of asset size of subsidiary, whichever is higher, so with that, oh sorry, whichever is lower, whichever is lower, with that, all the functions of audit committee in one another are over, right or not? So all the functions relating to audit committee are already, with that, all the functions of the audit committee are finally over, right? So in the audit committee, what we are left with, which we are going to cover in the next lecture, we are going to cover the review of information by the audit committee. Let me tell you one thing, so many times this question has been asked, review of information by the audit committee. What kind of information are mandatorily required to be reviewed by the audit committee in the listed companies, right? There are total 6 reviews, and then we are going to understand audit procedures for the audit committee related checks. It means what are the auditor's responsibilities, or what is the role of auditor's responsibility when he is sitting or checking the audit committee's role. What is his role? What are the general principles? All these topics. And once we are done with all these topics, we can say that our audit committee point will be over. Then we'll be moving on to the another very interesting topic called what? Board of directors. We'll move to the board of directors. So in the next lecture, what we'll do, we will cover first the remaining 2 parts of the audit committee what we are left with, and then after that we'll cover the board of directors and related other governances. So let us just quickly revise what we have done in this lecture. So as I already told you, audit committee plays a very important role when it comes to the chapter called audit committee and corporate governance. So first of all, we understood LODR. Sir, LODR stands for listing obligation and disclosure requirement. So is it mandatory? Yes, sir, it is mandatory for those listed company who have their designated securities to be listed on any of the recognized stock exchange. So what are the designated securities? It can be equity convertibles. What do you mean by the designated securities? It can be equity convertibles, right or not? It can be what? It can be equity convertibles, equity or convertibles. It can be non-convertible debentures and non-convertible redeemable preferences. It can be perpetual non-cumulative preferences and perpetual debentures. It can be ideas, it can be mutual funds, it can be securities debt instruments, it can be securities receipts, or any other securities which are specified by the board, right everyone? Next one, what is the purpose? The purpose I already told you is to streamline and consolidate the various listing agreements of the various different securities. Next one, when it came into the picture, it came into the picture on 2nd September 2015 by replacing clause 49 listing agreements. Next one, what is the coverage? It covers the post listing requirements only. Pre-listing requirements are not covered here, because once you become a listed company, then only LODR regulations are applicable to you. Then next point, LODR and section number 177 differences, where we have understood so many differences between LODR relating to composition, non-executive directors, independent directors, financial literacy, experts, secretary, chairperson, invitee, how many meetings, what is a gap, and what is a quorum, right? And then we understood the powers of audit committee, which are broadly speaking 4, but they are not exhaustive, they are illustrative. First power is to investigate, then to seek any information, to take this legal and professional advice, and the next one is to hire the experts from the outside consultation. Next point, board may also want, they may delegate extra. Then the most important thing, what we understood is the roles and responsibilities of audit committee. If we are not understanding anything in the examination, the trick which I already told you, try to remember the 16 clauses of CARO which are given under clause section number 143 subsection 11. Out of those 16 clauses, remove 6, 12, 16 and use the word to monitor before every heading of the clause, and that will become the functions of the audit committee. But other than that, what are the extra we have done? It has also to do the oversight of the financial reporting framework on financial statements, so that they can say that financial statements are sufficient, correct and reliable. It has also to recommend the appointment, terms of conditions of the appointment, and what? Remuneration of the statutory auditor. But in case of government company, audit committee is only restricted to determine what? Remuneration. Next, to approve, what is the next point? To approve the remuneration of the statutory auditor, which he has which he deserves to get for the other services. Next one, before the audit report and financial statement goes to the board of directors, the audit committee along with the management must review it first in relation to changes in accounting policy, accounting estimates, major changes, and accounting policies. I forgot to write here accounting policies, right? Next point, to review along with the management the quarterly financial statement before it is being sent to the board of directors for approval, to ensure that the end use of the borrowings is proper, and if the monitoring agency says that yes, management has deviated some proceeds of the product, it has to report it to the board of directors to take the rectifying measures, to monitor the intercorporate loans, and to always ensure that the related party transactions are being covered under the omnibus approval given by the audit committee. Next one, to always monitor the performance, independence, and the effectiveness and efficiency of external auditor, statutory auditor during the course of an auditor. Then to also check whether the internal financial control systems and risk management processes are effectively placed or not. To discuss the 3 points relating to internal auditor. If the internal auditor is discussing any matters, the audit committee should also discuss the matters with the internal auditor and should do the proper follow-up. And if the internal auditor has done any internal investigation and says that there's a failure of internal control system on that particular part, and that failure is material and important, then audit committee has to ensure that they are discussing the matters with the internal auditor. After that, they're reporting it to the board of directors. And most importantly, if the structure of the internal audit department, if the staffing, if the head of the internal audit department is adequate or not, then to discuss with the statutory auditor relating to his nature and scope of an audit, and everything relating to the post-audit concerns. Then to approve the vigil mechanism of the whistleblower policy to ensure that the public deposits have been repaid, have not been defaulted. To approve the appointment of CFO on the basis of his experience, on the basis of his candidate, on the basis of the experience, on the basis of you can say his experience, qualification, and background, and other functions as referred, and also to ensure that this particular subsidiary is utilizing the funds properly which were invested by the holding company, which is more than 100 crores or 10% of the total asset size of that subsidiary, whichever is lower. So that brings an end to all the powers and duties of what audit committee. So there are two things which we are left with in the audit committee. One is known as the review of audit committee, which has to do mandatorily as per the schedule. And the second thing, what is the role of an auditor when he takes care of audit committee? Are you getting the point? So thank you so much for this lecture. I'll see you guys in the next lecture relating to audit committee and other related regulations under the corporate governance in a very important chapter called audit committee and corporate governance. Thank you so much for lending your patient ears. I'll borrow it again in the next lecture. Thank you so much.